Stay ahead of the game with our weekly economic insights, where we break down the latest financial news clearly and easily. Hi, I am Soumya. In today's video, we'll discuss the latest domestic and international economic developments to equip you with the knowledge you need to make better financial decisions. We'll begin with SEBI's investigation into front-running at Quant Mutual Funds and its implication for investors. Next, we'll explore updates in GST authentication, including revised rates on everyday items, accommodation, and GST-free railway platform tickets. We'll also discuss the NSE's action against fake telegram gurus and channels and their potential impact on investors. Additionally, the GST Council's proposal to waive interest and penalties on specific tax demands and new tax regulations for the aviation maintenance sector will also be covered. Furthermore, we'll touch on India's rising food inflation, SEBI's new derivative, India's external debt ratio, and the upcoming integration of credit card payments through apps. Finally, we'll review the performance of market indices for the week. Let's start with SEBI's investigation on Quant Mutual Funds. The Securities and Exchange Board of India is investigating Quant Mutual Funds for suspected front-running. This is when fund managers use insider knowledge to profit from trades. Let's check with our expert take section to see what our experts think about this. Rajani Tandale is joining us, SVP Mutual Funds at One Finance, who is sharing her viewpoint on SEBI's suspicion of Quant Mutual Funds.
Thank you, Soumya. Front-running is an illegal activity. Recently, we saw SEBI has suspected Quant Mutual Fund getting involved in this, and the investigation is going on. Prior to this, we had also seen Axis Mutual Fund was caught in the same situation and they had to pay a heavy penalty for the same. Often in such situation, it's too late to react because by the time the news is out, the damage has already happened. Most of the times, investors tend to panic and withdraw their funds during such situation, and when the mass redemption comes, the fund manager has to sell their portfolio, and this causes the NAV crash. So ideally, one should analyze the situation before deciding it. Identifying such situation is honestly very difficult, but investors can take some precautionary steps like avoiding chasing the top return funds, choosing the funds which are fundamentally very strong and which has a longer track record. Keep your portfolio as simple as possible. You should choose index funds to avoid all such situations.
Moving on to new GST biometric authentication insurance. The Indian government is introducing a new biometric system nationwide to fight fake invoices in GST. Finance Minister Nirmala Sitharaman announced this at a recent GST Council meeting. The system will use Aadhaar authentication to prevent fraudulent input tax credit claims. It will be rolled out in phases to strengthen the GST registration process. The government hopes this will make the tax system more secure and transparent. Additionally, the Council has extended the time limit for claiming input tax credits for certain financial years. This move is expected to positively impact businesses by reducing tax fraud and improving the overall integrity of the GST system. Now let's talk about changes in GST rate for everyday items and accommodation. The GST Council has made changes affecting everyday items and student housing. The Council also reduced GST rates on carton boxes from 18% to 12% and set a uniform 12% rate for all milk cans, carton boxes and water sprinklers. However, there's good news for students and working professionals. Hostel accommodations outside educational institutions will now be GST free, up to Rs 20,000 per person per month, but only if you have stayed for at least 90 days. This exemption will help reduce housing costs for many people. Most importantly, railway platform tickets, retiring room, waiting room, clock room facilities, battery-operated car services and intra-railway transactions are now GST free, making train travel slightly more affordable. The Council's decision aims to simplify tax rates while providing relief in certain areas, potentially improving the financial situations for students and working professionals. Moving on to a warning for investors. The National Stock Exchange has warned investors about unauthorized stock market tip schemes. They are especially cautioning against an individual named B. Sridhar and a Telegram channel called Urema. These schemes promise guaranteed return, which is illegal under current regulations. The NSE emphasizes that neither B. Sridhar nor the Telegram channel operators are registered exchange members. To stay safe, investors can use the Know or Locate Your Stockbroker tool on the NSE's website to verify registered members. The exchange warns that participating in unauthorized schemes can be risky, leaving investors without protection. This alert helps investors protect their finances by avoiding potentially fraudulent schemes. Let's look at a taxpayer-friendly decision by the GST Council. To help taxpayers, the GST Council has decided to waive interest and penalties on tax demand notices issued under Section 73 of the GST Act for the financial year 2017-18, 2018-19 and 2019-20. However, the full tax must be paid by March 31st, 2025 to qualify for this waiver. The Council also suggested new minimum limits for filing tax appeals and introduced a new form, GSTR 1A, to help taxpayers correct mistakes in their GSTR 1 filing. These changes are expected to reduce tax litigation and provide financial relief to many taxpayers, potentially improving their overall financial situation. Let's take a look at India's aircraft industry. The GST Council has decided to apply a uniform 5% tax rate on aircraft parts and components imports. This move aims to clear up confusion in custom classifications holding back the industry's growth. The change will help reduce costs for maintenance and repairs companies, making them more competitive globally. It could also attract more investments to create a strong aircraft maintenance ecosystem in India. The government hopes this will help India become a major aircraft maintenance and repair hub, taking advantage of its ideal location between Asia and Europe. This decision is good news for the industry. It could lead to more jobs and business opportunities in the aviation sector. Let's talk about the food prices and what economists are saying. Due to severe heat waves in northern and eastern India, economists predict food inflation will stay between 7.5% to 8% for the next 2 to 3 months. The hot weather has affected the production of vegetables like tomatoes, onions, and potatoes, leading to higher prices. The Bank of Baroda warns that this could cause inflation to be higher than what the Reserve Bank of India expected for the first half of the financial year. The monsoon rains have also been uneven, with some areas getting too much rain and others not getting enough. The Reserve Bank of India might not lower interest rates if the rain don't improve. This situation could mean higher food costs for households in the short term, putting some strain on family budgets. Moving on to the changes in stock market. The Securities and Exchange Board of India has approved stricter rules for stocks entering and exiting the derivative segments. Stocks need to be in the top 500 by market value and have higher trading volumes to qualify. The new rules aims to remove stocks with consistently low turnover from this segment. SEBI is also forming an expert group to review the future and options category, focusing on market development, investor protection, and risk management. These changes are designed to create a stronger and safer stock market. For investors, this could mean a more stable derivative markets with less risky options, potentially leading to better long-term investment opportunities. Now let's look at some positive news about India's economy. India's external debt ratio has fallen to 18.7% of GDP in the 2024 financial year, the lowest level in 13 years. This improvement shows that India's economy is getting stronger than its debts. The total external debt increased by about $39.7 billion to $663.8 billion, but grew slower than the overall economy. Short-term debt has decreased, which is generally seen as a good sign. The US dollar remains the main currency for India's external debt, followed by the India's rupee. This positive trend could lead to better credit ratings for India, potentially attracting more foreign investments. For citizens, a stronger economy could mean more job opportunities, higher income, and better economic stability in the long run. Lastly, let's discuss an important change for credit card payments. Starting July 1st, 2024, you might be unable to pay your credit card bills through popular apps like Cred and PhonePe. The Reserve Bank of India has ordered all credit card payments through the Bharat Bill Payment System or BPS. Many big banks haven't set this up yet, so their credit card payments can't be processed through these apps after June 30th. The RBI wants to centralize these payments to better monitor and stop frauds. While this might be an inconvenience initially, it is aimed at making credit card payments safer in the long run. If you use these apps for credit card payments, you'll need to find other ways to pay your bills until your bank complies with the new rules. Let us wrap up with this week's market performance. Indian markets experienced a roller coaster ride on Friday, reaching new all-time highs but succumbing to profit booking. Before retreating, the Nifty 50 and Sensex briefly touched record levels of 24,174 and 79,671.58 respectively. The session closed slightly lower, with the Nifty 50 down 34 points and the Sensex down 210 points. On June 28th, domestic institutional investors bought a net value of Rs 6,658.31 crores, while foreign institutional investors had a net outflow of Rs 23.09 crores. That's it for today. This week's Economic Insight taught us about the significant changes and plans across different sectors. Amidst all these changes, one thing remained the same. The financial world continues to evolve rapidly. So stay alert, stay informed, and most importantly, stay focused on managing your money wisely.